Start this video off by saying I am not a financial advisor. Should you choose to invest in Bitcoin or any other asset, do your own research or seek the advice of an actual financial advisor, preferably one that knows a thing or two about crypto. Now, what is this? On the right side, if you're wondering, this would be the hash rate of Bitcoin. And if you are not aware yet, we have had roughly a 27% drop since its recent peak, for the obvious reason that miners had to capitulate because, or at least shut down because of the block halving. I'm sure you know what the block halving is. It's the mining reward's cut in half, and so it takes double the effort to produce the same amount of Bitcoin, basically. And so that put a lot of miners out of business because either they have outdated equipment or they just have higher electrical costs or whatever else. Anyways, since we did have this drop here in hash rate, my guess is that the next difficulty adjustment, which is in 2 days, 10 hours, and 50 minutes, we're going to see the difficulty drop. And so some of the miners are likely going to end up being profitable again. And if we do not see a major price drop before then, it's less likely we're going to see one. And honestly, if we do see any bit of a price drop, it's not going to be anything we're not used to. My guess, if we did have a price drop, we may take another shot at the 200 daily moving average at the most. I don't see us dropping below the 200 daily moving average. Now, the last time we dropped down below 9,000, we did take a shot at the 200 daily moving average, and we confirmed that it has turned from resistance to support. And I notice you can't really see me on the camera here. Brighten the room a little bit. There we go. You can see me somewhat. Anyways, we have confirmed that resistance has become support as of what the 200 daily moving average is. Now, once we did that, we ended up going back up towards, well, I think it was roughly 9,700. And so Friday, or was this Thursday? Right here we put in a bearish engulfing, but if you can see the bottom of the candlestick there, it has a bit of an extended wick, so you can see that the price did in fact bounce once it landed on this support level here, right at 91.71. And since then we have been on somewhat of an uptrend again. Now, come Monday, we could see some volatility depending on where we are at Monday, because there is always a chance for a futures gap to open. If we somehow jump up like $1,000 over this weekend, we're likely to go down to fill the futures gap on Monday. Vice versa, if we drop over the next 24 hours, we're likely to go back up to fill the futures gap, because a lot of people believe the futures gap is a thing, so it tends to happen. Anyways, moving on. Okay, so if you've browsed around YouTube looking for information of what's going to happen after this halving, you probably find that a lot of people have been comparing this halving to the previous halving that happened in 2016. Given Bitcoin doesn't have much price history, there's not much to really go off of. We've only had two other halvings besides the one that we currently just went through. And so that's why they try to compare. There is some data that you can take from the previous halving, and that's the fact that the halving caused a miner capitulation because some miners became unprofitable because it required twice the work to make the same amount of Bitcoin. And of course, when miners drop out, the hash rate drops, difficulty adjusts, then everybody starts to recover, and we go on our merry way. Now that is a comparison that can be used, and that's why I still think that there is the possibility that we could crash, but not as bad as what happened here. There's one thing that we cannot compare. There's one reason that we cannot fully compare this halving to the previous halving, and that is because now we have a lot more liquidity in the market than we did in 2016, meaning volatility now is not going to be as bad as it was in 2016. 2016 we had a post halving crash of roughly, I think it was like anywhere from 20 to 40%, something like that. My measuring tool isn't working for some reason, so I'm not even going to try it again. For now, fast forward to today, the chances of us having a 40% crash, the reason we did have a major crash earlier this year, but that was because of a black swan event that had nothing to do with the mechanics or fundamentals or anything of this crypto market of Bitcoin. That doesn't count. That was a liquidity crisis, and that was all across the board, all across all markets, and that's in the past. Now, when it comes to the halving, and if miners do become unprofitable, there's a lot more liquidity to cushion the blow, as you would say. If we do crash, it's not likely going to be a heavy crash. That's if we even crash at all. I mean, if we're comparing halvings, we can go back to the first halving, and you'll notice that there wasn't even much of a crash at all after the first halving. I think the price just kept going sideways and it just went up and never even crashed. So as far as that goes, it's a tricky thing comparing these halvings, because there's so much difference between today's halving, the previous halving, and the halving before that. Liquidity being one of the main differences. So, as far as one thing that I do gotta take from this halving is the fact that it took it took roughly 4 to 6 weeks for this miner's capitulation to resolve, and then the price started going up. So basically, it took about a month, maybe between a month to 2 months, for the supply shock to start to affect the price. So I would expect something similar to that after this halving. Well, of course, the halving has already happened, but over the course of the next month or two, no matter where the price goes from today, we're likely going to see it start to go up in a month or two. That's what I'm trying to say. And of course, like I said, since we will likely not be going down too far as price is concerned, that means my end of the year prediction will likely be anywhere between $20,000 to $50,000. I will stand by that until we get there to see if I was right or not. But there's enough evidence in front of me to point to the fact that we will most likely break the previous all-time high by the end of this year. So, moving on. So, on the weekly, during present time here, over the past couple of weeks, we have seen, over the past 2 months actually, we have seen a decent uptrend ever since the crash that the virus caused. Now, there's one thing I gotta point out about this crash here. There's a lot of people that say that this crash has broken the logarithmic trend that we've been in since Bitcoin's birth, and I have to say, no, it did not break it. It did not invalidate that trend at all. It was a black swan event. It was not predictable, but there is no trend that you will ever find that has hit every single mark perfectly. So, and there's another thing I gotta add to this. It is the fact that this low that it created for this year is still above last year's low, so that means we are still on an uptrend as far as the macro level goes. Now, the fact that we've been seeing so much bullish momentum here, I'm going to say it's going to continue. And like I said, there's still the potential for a crash. However, I don't see a very steep one happening, and if we do have any sort of crash, if we do have a correction of any sort, it will likely not take us below the 200 daily moving average. Another thing I got to point out while we're on a weekly here is the fact that the MACD had in fact crossed bullish and is looking very bullish as of recently. Over the past 3 weeks, we have been moving up on this scale. Now, another thing I got to point out is, you know what? Let's take a look at the RSI here on a weekly, if I can actually bring it up. We are just below 60 here, so that gives us a good bit of room to run from here. So we don't really necessarily have to have any more of a correction here. Of course, if you've been paying attention to price action over the past couple of days, you'll note that we have been sort of consolidating. Let me zoom back in here onto the daily to show you what I'm talking about. As soon as I find the day, there we are. Yes, let's open this up a little bit, move up here. Actually, let's close this down and let's zoom out. Yes, you'll see that we have been bouncing back and forth right here. This is, in fact, a consolidation pattern forming. Which one it is, I'm not entirely certain yet, because there's just not enough structure for it to form anything. I mean, if we zoom in here, if we were to zoom in, let's go in a bit further. Let's go to the 4 hour. Now, if you see here on the 4 hour, we have in fact put in a falling wedge that broke out in the upwards, well, in the sideways direction, I guess, but it still broke the resistance. So that would tell me that in the near term we should expect a rise in price as the next day or two unfolds. So that being said, let's see what the 4 hour MACD is telling us. The 4 hour MACD is telling us that we are going to have a bullish cross, thus confirming well, giving us a higher chance that the price is going to be going up over the next day or two, because this is a bullish sign. You can see the histogram is going back into bullish territory. It's in a negative, but the bars are getting smaller, and it's going to cross into the positive soon. Almost said prostitute. Wow. Okay, moving on. Okay, so news. I'm sure you've already heard about this by now, but J.K. Rowling, whatever her last name is, was on Twitter and was intoxicated and asked about Bitcoin, and it blew up into this big thing, and then it got Elon Musk got involved and all that, and anyway, I don't know, it was pretty cool, I guess. I'm sure you can look it up and see for yourself if you haven't heard about it by now, but it's been on basically every YouTuber's video, so I'm not going to really go into it. Now let's see what else is going on here. Next page. Bitcoin is invading decentralized finance on the Ethereum network. Bitcoin halving. What does it mean for investors? Bitcoin's price has bounced, but miners may still be switching off post-halving. Well, I figured they'd be switching off, considering the hash rate has been dropping. Futures trading for Bitcoin hash rate has arrived. Wait, what? An up-and-coming Bitcoin derivatives exchange now allows its clients to bet on Bitcoin's future mining difficulty, and people are longing the hell out of these new contracts. The FTX exchange announced last night that its Bitcoin's hash rate futures are now live. These contracts will trade against Bitcoin's future mining difficulty, since mining difficulty is inextricable from hash rate. You're basically betting on Bitcoin's hash rate will decline or increase over the contract's lifespan. Ooh, wow. FTX hash rate futures are futures that expire to the average Bitcoin mining difficulty over a period of time. This means that they are roughly represent the total hash power being used to mine Bitcoin, the blog post notes. The terms of the contracts are dictated quarterly, and in other words, they begin at the start of a quarter and run their course through the end of another one. The contract is settled by taking the mining difficulty average during the contract's time frame and dividing this by 1 trillion. Not even 12 hours after the launch, futures contracts that are long Bitcoin's hash rate for quarter 1 of 2021 are surging up 20% over the last day. The 24-hour volume on the contracts is just shy of 1 million. The interest in these contracts isn't surprising given the boost in publicity Bitcoin has enjoyed lately, from headlines about the halving to brand-name legacy investors like Paul Tudor Jones entering the market, and Bitcoin soaking the limelight at this time of unprecedented central banking, monetary, and fiscal intervention. It's even less surprising when we consider that these contracts are the first of their kind for Bitcoin's barely 11-year-old markets. A contract like this could be a boon for miners who have lacked proper market tools to hedge their operations. For a group who usually has all their eggs in one basket, not just Bitcoin, but the hardware that drives it, futures like this are necessary for them to take the opposite side of their bet. That's part of the reason why FTX built this option, because of demand from miners. we've been talking to a bunch of miners recently and received a ton of interest in it and related products. For a while, crypto industry was mostly a way to trade Bitcoin. I'm excited to help the industry branch out and become a more fully fledged ecosystem with infrastructure to support it. So yeah, that's interesting. You can now trade, you can now bet on Bitcoin's future difficulty. That was unexpected. I did not see that coming. I'm gonna have to look further into that. I will actually leave the link to this article in the description below, because this is really something. This is progress, if anything. And yeah, moving on. Okay, so a quick statistical view of the thing that has been affecting all of our lives, whether majorly or minorly. It is 19, and so we have a global case count of 4.6 million. The United States case count is 1.4 million. Russia is 272,000. United Kingdom is 241,000. Total global deaths 311,452. And looks like they actually decided to put the total recovered and total deaths in over here, so that I told you, I've mentioned my feelings about how pointing out how many people have been tested is not really, I don't think it's really a viable statistic, but that's me. Anyways, we will take a look at the daily case count chart here to see where we are at on the curve globally. And if you see, we have flattened the curve, but it has not started going down yet. So there's still more work that remains to, yeah, there's still a lot more work that needs to be done as far as this goes. The reason, now, the United States case count on the daily chart, I'll show you that in a second, it is going down. Now, why isn't the world's case count going down, since the United States has the highest amount? That is because as the United States case count goes down, there are other countries with their case counts starting to go up, and it's kind of creating an equilibrium here on this curve. And that buzz was a dryer going off. Now, I'm going to go into United States here, and we're going to check the daily case count on there. Yeah, you can see right here in the United States, our curve is actually starting to go down. That was a terrible arrow that I just drew, but it gets the point across. At least I hope it does. So, the fact that the curve is going down, that is a good sign. That means that mitigation efforts are working. That being said, however, don't get too confident, because it doesn't take much for people to fuck up and cause the curves to start going back up again. Like I said before, there's information on the CDC's website, the World Health Organization's website, your state or local government's website, the federal government's website, your minister's website. I'm not talking about church, I'm talking about like a leader of a country. I don't know. I'm whatever. There's just go to a viable website, a government website, to get the right information about this virus. If you need any information about this virus, always wash your hands, wear a mask if you need to wear a mask, or if you're required to wear a mask. I know where I'm at, we are required to wear masks wherever we go, and actually where I'm at, they're starting to lift some of the restrictions. My hours at work are going back up, so that's a plus. But yeah, always wash your hands, wear a mask when you need to wear a mask, stay 6 feet away from everybody, and just use common sense. That's the best way to fight this. And with that, I think that's all I have for you guys today. Stay safe out there. I will see you all next time.